Good afternoon. It's the first day of February 2022 and we have seen a recovering market, the stock market, with numbers of the major indices upwards on the green. But today is a day to discuss the cement industry. Two listed firms struggling to deliver on price gains, but at the same time looking like the fundamentals are beautiful. Are they really beautiful? Well, we will have that conversation in a moment, but for now, let's look at the performance of the day. We'll start with the gainers, and after that, the losers and the movers of the day. The gainers of the day were led, let's see. I'm waiting for my board to be updated with the gainers of the day. Do we have the figures? Thank you very much. Kariuki General continued with its winning streak on the outskirts of the expected dividends. Went up 9.72%, being the greatest gainer, and closed the day at 59.25. TransCentury did 4.84% to close the day at £1.30. This is British American, 4.46% upwards, closing the day at 168. Bamburi Cement is up, closed the day at 38.90, I think, being 3.32% upwards. And Standard Group was the last on this list, closing the day at 15.30, being 3.03% upwards. Let's have a look at the losers of the day. And the losers are led by BOC Kenya PLC, closed the day 8.44% downwards, settling at 70 shillings and 50 cents. And Home Africa Limited closed the day at 36 cents, being 7.69% lower. Flame Tree closed the day at £1.22, being 6.87% lower. Nairobi Business Ventures is still having its correction, closed the day at 4.95%, 4.95 shillings, being 5.53% downwards. Liberty Kenya is the last one on the list, 6.66 shillings, closing the day at that, being negative 4.86%. The major movers of the day. All right, KCB continued with its winning streak, closing the day having traded 8.1 million shares. It was followed by Equity Bank Group Holdings, trading 4.72 million shares. The two of them already is like the main market, because that's like 12 million shares traded. Kengen made it to the list of the great movers today, having traded 2.26 million shares. Safaricom PLC did not disappoint, traded 1.87 million shares. And Kabasid also made it to the big boys list, having traded 284,000 shares. To have this conversation with us today, I am joined by Solomon Kariuki, who is a research analyst at African Investment Bank, AIB, I think. Welcome, Solomon.
Okay, thank you for having me today.
Thank you. What do you make of the figures coming from the market today?
Well, I would say it's positive because for the whole of last year we saw moments of swings from different companies, and we feel like this being an election year, we might see the market moving in tandem as the market, all of it. However, we might expect that we will have some few needle movers in between them. So what you have seen from the start of the year up to now, I would say it's positive, and mainly because if you look at the movers, most of the movers are foreign buyers, which is positive given that we associate an election year with risk. So
when you say movers, foreign buyers, are they buying or are they selling?
They are buying.
Oh, lovely.
Yeah, from our observation, what we observed from yesterday and from the better part of last week, most of the trades were foreign buyers. That means the foreigners are coming back. And if you look at that, it's mostly on Equity Bank and KCB Group, mainly because from where we stand, we are seeing that as foreigners taking position, because we expect better FY21 numbers from where we had in FY20, whereby most of the banks did not declare dividends. So from where we sit, we are seeing it as investors taking position, trying to take advantage of the dividends that might come. As you saw in Q3 numbers, around 3 or 4 banks declared interim dividends, something that we have not seen in a couple of years. So having seen that, then we feel that most of the investors, even some of the local investors, are just positioning themselves.
Yeah, but I see most of the positioning is around the banking stocks.
Yes, of course, as I had pointed out, is because there's an expectation of better performance. And
in the banking stocks?
In the banking stocks. And you find that our banking stocks never disappoint. I think it's one area in our market that is very predictable in terms of how the results will pan out. So investors have known that, and they are taking advantage of it.
Well, we'll have that conversation further, because I'm feeling on the on the investors' side, yes, the fact that they never disappoint is good. On the economic analysis side, however, I'm thinking they'd never disappoint because really, one, they are lending to the government. The government is crowding out the normal mwananchi, and when they lend to mwananchi, it's at very expensive rates.
It's true. We observed that in Q3 numbers, whereby we observed that the growth to commitment to government securities was growing higher than total lending. And it's a point of concern, even with the CBK highlighting that in the recent MPC press brief that around 8.6% growth in private credit growth, which was highest since Feb 2020. But then again, this lending is concentrated on some few sectors. There are some few sectors that are coming back. We have seen some few numbers that came out, I think, yesterday or in the course of last week in terms of the prices of land and houses. So you might find that that could be an attractive opportunity for banks to lend. So our main concern is that the growth we have seen in banks, even looking at the balance sheets, maybe for KCB and Equity, they hit the 1 trillion mark in terms of balance sheet. But then this growth is not organic, it's in terms of acquisition. Like, you see like Equity Bank, it was mainly driven by BCDC acquisition in DRC, and KCB is driven by BPR acquisition in Rwanda. So if we could see more organic growth in terms of the balance sheet, and this growth will come from deposit mobilization coupled with lending, and lending to the mwananchi and not lending to the government.
Interesting, organic versus inorganic growth. But I usually find it very interesting when technical persons like yourselves give us very beautiful figures. For me, at the end of the day, as an investor, I'll be more confident when I know that you are putting your money where your mouth is. Where are you investing, Solomon? Are you also going for the banking stocks?
Particularly as an investor, the most attractive place right now is banking stocks. Because even looking at their valuations, most of them, in terms of the PE valuation, the price to earnings valuations, they are below maybe the sector average, even for sub-Saharan and for global banks. And you also find that it's quite ironical because on the other side, they have one of the highest rate of returns in the market. So a good place as an investor is to position yourselves with the banking stocks.
And that is where you're putting your money as well.
Well, I can't reveal my portfolio live on TV, but I would say if you're an investor trying to look for good returns in 2022, then let the banking stocks be your number one picking list.
Fair enough, fair enough. I hear you loud and clear. I can't reveal my portfolio. Let's talk about the cement industry. There are 2 listed companies in the stock market that manufacture cement. I was looking at the price gains over the year. I mean, not just year to date, but a full year in terms of if I invested in them on the 1st of February 2021, by today would I be having some good figures. And there's nothing attractive.
I believe, I don't know, maybe you can sit down with you and adjust the numbers again, but for me, I view it as divergent growth in terms of the two listed cement companies, that is Bamburi and Portland Cement, East African Portland Cement. Because if you look at both, they have quite an opposite side in terms of growth. You find Bamburi year on year very consistent in terms of profits. There's growth we have seen, very disciplined in terms of paying out dividends. But then on the other hand, EAPC is the black sheep of the company or of the market. So they're not paying dividends. They're constantly in the red in terms of profits. Like I believe last year was I think the best year they have done in a few years. They came back to a profitability of I think around 2.7 billion. And if you go dig deeper into the numbers, you find it's an asset disposal that they had. But then even with that profit, you find that they are still struggling in terms of cash flows. They are not able to have enough cash flows from their operations. News from the company is that they were trying to restructure their payroll. You find that they have reduced the number of permanent staff, and now they're taking the staff members on contract. And they're also looking at opportunities to dispose some of the land that they own, because they own huge chunks of land. Now, the main work of the company is selling cement, but then you can't be, the company can't be getting their earnings from asset disposals. So
that can only go so far.
Yeah, that then points out that the company is not able to take advantage of the opportunities that are there in the market. Now comparing that with Bamburi, who at the end of the day have really taken the grip of the market.
What's the difference between these two stocks? Is it just pure management, or what is the difference?
From where I stand is that it starts with the management, because the management then will be reflected in the results, and the results will then come back to the numbers that I'm supposed to look at in terms of the multiples, in terms of the ratios. So you find that EAPC is suffering from the perennial challenges of government institutions. So you find that the institutions are not well run. There is kind of mismanagement, and you might be shocked that KDF takes over like what they have done with other institutions. It wouldn't be a shock, but it's a company with huge potential, because if you look at the cement companies, they find that they are one of the companies with their own clinker production, and clinker is a very, very important tool in terms of cement production. So for EAPC, they have their own factory that does clinker production, and that actually should then take out a lot of cost of goods for them. But then at the end of the day, you find that you're still in the red. So I would say that the main difference between both of them stems in the management of the companies.
We'll come back to that, because I still want to talk about the clinker business and why it's not taking advantage of this. Although it feels like government being linked with government is doing more harm to EAPC than helping it to capture the market as it should, and as its peers are doing. I was looking at the figures of cement production and cement consumption 2019, 2020, 2021, at least for the first 9 months of 2021, and I hope that they'll be able to put it up. And 2020 was a beautiful year. 2021 is proving to show that was even a very beautiful year. Yeah, that graph. In other words, this is an expanding sector.
Correct.
But still, we are not seeing this reflected in the stock market. It seems like the companies that are not listed are performing better than the companies that are listed.
That's one school of thought that we have, and which I abide to on some points. But then again, you find that the performance of the cement companies, or let's start by looking at the production generally in the market. So you find that in the cement market, the production and the consumption, you find that the production has been growing marginally faster, around 3% on a 5-year CAGR to 2020, compared to around 2.5% on a 5-year CAGR for consumption. But then again, you find that there was around 100% absorption in terms of what was produced versus what was consumed, except for a few moments in 2020, based on what happened with the pandemic. So generally, the industry has been growing, maybe not in double figures as we would want it to, but there has been growth. And this growth has been attributable to two factors. One is government projects. You find that maybe some people say that the whole of Nairobi is a construction site. Because now, if you say that and then at the end of the day, the cement companies are the ones that are performing poorly at the market, then there are question marks to be asked. And then the other segment that is, or the other factor that is driving cement consumption in Kenya is individual home builders. It's an aspect that is often overlooked, but it's one of the key drivers of cement consumption.
What do you mean by individual competitors?
It's the me and you. You want to renovate your cowshed, you want to do an extra floor in your project in Githurai or such things. Those are the individual home builders.
Or individual home builders?
Yes.
No, I had heard individual competitors, so I was wondering, are we importing, are there individuals importing cement? And is it really a competitive threat to the cement manufacturers? There was chatter in the market that recently you've seen in the news that Chinese contractors have taken up most of the contracts by Kenha, Kera, and Kura. These are road contracts. So there was chatter in the market that some of them were bringing in their own cement, which is unconfirmed from my end. But then again, that would be very unfortunate for our sector, because at the end of the day, we would like, because they are doing the load for us, then they would use our cement so as to build our economy. So those are unconfirmed news. Now, to what we know is that some companies like Bamburi has really benefited in terms of government projects. Looking at the SGR, Phase 1 and Phase 2, looking at the expressway, looking at some of the big highway constructions that are happening. One of the biggest beneficiaries has been Bamburi, which we can see because they are listed, but I also believe that the other unlisted companies are also benefiting from the same. From the large government projects. Yes. Now that would also bring a question on to why EAPC, being a government entity, is not maybe taking advantage as Bamburi would have. So I think it's a question that maybe we would ask in an investor briefing with them. Strange, very strange.
Yeah.
So you're saying that the importation of cement into this industry or into this economy is marginal, and it is not a competitive threat to some of these manufacturers? Well,
I can't comment on the exact figures of importation, but there was chatter in the market that there might be some importation, especially from the foreign contractors.
Yeah. All right. There is a lot of growth, and I think we will perhaps go to some of the private cement companies later. But there was a lot of growth, or a lot of talk of growth in the construction sector, even at a time when perhaps the country was in lockdown.
Yes.
And this is both government, because I know you had mentioned government, and private. There are people who are still building apartments and making some very good investments. Where is this money coming from?
Well, I'll give you an example. Is that today there are various alternatives in terms of funding, mostly for the government. If you look at the Mombasa Expressway, it was funded through a public-private partnership. So that means the whole project is around, I think, 60 to 70 billion in terms of the whole cost. But then you find the government has almost zero contribution to that. So it's being done by a private operator. So it's a build, operate, and then transfer after some time, after you've recalled what you had in your commitment that you had.
Yeah.
So we haven't heard of any other PPP project, but now taking the example of the expressway. So that's 70 billion that was not committed by the government. It was committed by a private investor. So you find that in as much as you would say that there was COVID, you find there are some pockets of opportunity that investors have. You might find there are some investors who are still, who have the financial power to maybe negotiate something with the bank, or find other private investors, or even had saved up to do a project. So whether COVID is there or not, you still go ahead with the project.
There was chatter, if I can put it the way you put it.
Yeah.
There was chatter that a lot of these construction projects are funded by corrupt money, or in the years past, there was chatter that it is being funded by piracy money from Somalia. Have you heard anything in that direction?
Yes, I have, but then I guess then the whole country is corrupt, because you find that the construction is distributed across the country. Not evenly.
But we devolved governments, and when we devolved governments, it is said we devolved corruption effectively.
Correct. But then you'll find that, yes, in as much as it's across the country, it's mostly in Nairobi metropolitan region. And you'd find that, I would say those are unconfirmed sources. It's something we can't verify.
Yeah.
Unless now we go for every construction site and ask for the source of money.
Where are you getting money to build?
Exactly. So I would say where there's smoke, there's fire. Probably there are some who got the funding from unquestionable means. In this case, corruption, piracy, and all those. But then again, I would say I believe there are some hardworking Kenyans who have put in sweat and blood to do whatever the construction or project they're going to do.
Absolutely.
Yeah.
When we come back, because I want us to take a break briefly, but when we come back, we will talk about Savannah Cement that is expanding and needs more money, and their choice of getting this money. We will also talk about the infrastructure bond that the government released today, which I think makes for some very good banter with Solomon here. For now, let's take a break and don't go away. Thank you.